Good morning traders, and welcome to this new Bitcoin technical and order flow analysis video. So I really recommend you watching full video today because I will be doing multiple segments. We will be starting with why we are bouncing from 77,000 region. Okay, our traders in a group, they have access to my charts and they knew we have swing area here, and I was planning this long for weeks or months. Yes, this is how powerful technical analysis can become. You are able to predict reactions when you know there is so much confluence at one place. You can see I was taking that trade as well in the group, and it was immediately expected to be swing long. Yes, and we are getting much like big bounce. So I'll be giving attention to this first. Then we will go over my yesterday trading. Yesterday trading was really interesting. I was taking some trades with our traders. Multiple shorts. I was planning to add to my long, never got a bit deeper, so we'll go over that. You can learn a lot from this. The third portion of the video will be given to we have Cpi news event today, and I expect significant volatility in the markets on equities and also on Bitcoin, and you really need to prepare a strong trading plan for that. So it's gonna be pretty much like my trading routine when I'm sitting to my desk, because I was not checking charts as I woke up. So you will see how I'm preparing myself from technical and order flow analysis for the Cpi news event, where I want to interact with the market to the upside, to the downside. I'm not going to very likely take any new positions now because I still have long from lower, and my shorts here were stopped out as market pushed here, so I need new position for short, and for the long I want to add to it, yeah, and also create new longs if we get deeper pullback. So Cpi preparation plan will be key, and at the last portion of the video I can show you my bear market targets for Bitcoin in case we get full-blown financial crisis in the world. Because for now we have just fear in the market and uncertainty. Market doesn't know if we truly get recession or financial crisis. It's gonna be confirmed from multiple news events we get every single month. But if we don't get it, because in 2022 it was similar trap in the market when everybody was expecting recession, but we never got it. So same thing can happen now as well. But in case it doesn't, and we will see S&P falling 20, 30, 40, 50%, I'll be showing you big targets for the Bitcoin to look for bear market lows, and where I will be engaging with market as a hodler, like big time. All the capital waiting on the sidelines will be engaging with these areas. So last portion of the video will be macro segment with bear market targets for Bitcoin. Okay, so let's go. So here is swing trade area. I can copy this. So it was on the chart for a very long time, 4-hour time frame. Look at that. So here is the swing area. So this was expected. We will get a reaction at least for swing trades. Technical analysis is fantastic. So you can see if we zoom in, I'll be showing you that over here as well with the VA locals. So Bitcoin was falling. So we knew this is like when we turn on the low volume nodes. I need the high volume nodes from here. This was higher time frame low volume node, but in the end Bitcoin stopped and rotated this smaller range. This was 1 day range, and we still found stability at the val of that range, and then we pushed to the upside. Now from AMT perspective, Bitcoin was falling into the 4-day range here, yeah, so we've spent a bit of time here. So this time another reaction was expected, and you can see clearly what happened here. Very small front run of the 4-day epoch from the AMT and VAH. Okay, so you are getting reaction. This is in AMT what you call bullish reaction, when you retest the VAH and POC, which are in the high regions, and you are getting immediate strong pump from that region. You are spending almost acceptance, and time at the certain levels is very key parameter for our trades. The less time you spend at level, the better for your trade. The best trades in the market for you are done when market is rewarding you in few seconds or even few minutes. So this was the case. No close in the area, no acceptance, just weak. And you can also see the reaction was, this area was planned to be swing, and the planned bounce is already becoming swing. first you've got the intraday bounce, but look at the reaction, it's already 8%. Swing trades we call also based on reaction, like 7, 10, 20% moves for me are like swing trade reactions, even though it took just one day. Yeah, but I would preferably want to hold this trade for longer as well. That's why it's swing. It was not just intraday area of interest. So this area was planned for a very long time. We can also see, so from AMT it was very clear, anchor VWAPs, 1 and 2 of them, both of them were naked, never retested, so this also helped our bounce. And we also got not only the 4-day naked point of control, but there was also weekly naked point of control. We've closed DWAP. You also closed, and don't forget about CME gap, okay? So this is another major confluence. CME gap, we need to go to CME to see it fully. We go to 1 hour time frame. Some educators are telling you trade like it's very bullish when you go into CME gap and you don't close it fully, and then you get reaction. Actually, if you traded CME gap, I traded over 1000 CME gaps. I'm seeing those trades in my statistics in my journal, and I know we are getting pretty strong reactions often when you close the CME gap as well. So not only partial fills, but very stable reactions are getting done from these CME gap closes. Why CME gap close? I got this question in the group. The reason is simple, especially in the bull markets. So imagine you are trading on CME and you are opening gap, like you are opening massive gap to the upside and you are in a short. So you are immediately getting trapped. On CME, many traders have deep pockets. You have entities there, less leverage and so on. So they never got a chance to escape. Okay, so once you close the CME gap, these people who are trapped on CME have a chance to escape the market. And as they are in short, they will be closing positions to square out. They will be pushing market to the upside. So first of all, you are getting help from shorts here. Secondly, when you are closing gap, it's institutional inefficiency. Every single market in the world, Bitcoin or whatever, is trying to close gaps. It's trying to create a real volume. It hates to have a gap. So this is also self-fulfilling prophecy when market is viewing closing gap as it believes you will get reaction after you close the gap. It views it as a major confluence for trade. And gap strategies, that actually in the world, you have traders who are trading just gap closes on ES1, for example, or Nasdaq. They are working more often than they are not, which means they work more than 50% of time. It's already advantage for you, yeah? This is not casino, but if you have 60-70% chance to get trade after you close the gap, fantastic. That's what is trading about. Trading is about probabilities. And yeah, so gap close was also very important. And you can also see this volume profile. Let me go, so we can go to Bitcoin on chat data, Bitcoin swing trading over here. Like really, like the strong support is starting on a retest of our previous range, but you already did a bit of volume here in this area, okay? So like whole area, when we lost 84,000, that's why I warned our traders so much. When 86, 84 is lost, we have literally no support until you hit this very little initial low we put in on Bitcoin, and then you have another node which we just bounced yesterday for swing. Okay, some volume was traded, that's nice, but you know, proper support in case we get further bleeds on equities is of course coming from 2024, which was 9-month range. Look how much volume was traded here. We will very likely spend weeks or months there, and there will be multiple bounces and just ranges formed. Okay, so it's nice we are bouncing from here, but the inefficiency is still not close. So if you lose, for example, yesterday low, then yes, you will be getting into the 73k, which is start of proper volumes. So that was another region. You've got some volume there. And when we return here, so you close the low volume node on medium time frames. You also close a lot of inefficiency. So not only you were closing CME gap, but also on traditional exchanges, you've had weekly single prints here, low volume node, and single prints from core TPO templates. So like huge inefficiencies closed. 1 hour order block was hit also. This, you can view this as area. And overall, this is why you always mark high volume nodes as a like area. You can trade exact levels Bitcoins, that's cool, but Bitcoin is so volatile, you really need to view this as an area, and you will be getting people who are doing front runs. Okay, so they put limits, like a lot of people put limits at the start of the so this is trade area. Look at that. Yeah, so you are starting to come here, but if you are trying to trade exact level, you will be left out. So a lot of people started to put limits in the high volume node, but this was pretty tight front run, so sometimes you get them and you really need to react then. So this is the reason of the bounce, very highly technical, prepared in and for me, as when I turn on the trades, let's go to 5-minute time frame. Let's turn this off. So this is now swing trade. For me, the minimum target on this swing long here was to reach. So I was watching what we are doing here, because you can really literally come here. We market right for swing failure pattern, but it never lost this area. This was crucial area for me, because if you lose this, I would be expecting much deeper pullback, this market structure, but it never happened. So for me, I was patiently waiting, and then I said, like, another target was this here. This was from previous day New York session high. I have pretty harsh rejection. So I was watching if we do swing failure pattern, because again, you can come here and start to create expanded range. Yeah, so and new rotation. Never happened. Bitcoin was very strong. There was no swing failure pattern here. So for me, I was delaying take profit. And in the end, I mean, I took take profit here to be mechanical. And then I was taking a bit more profit at these highs as well, because this was intraday resistance. We are preparing for shorts here, so from starting shorts from here, and we've got multiple shorts there. I only missed long here, so I was not on the computer when the drop happened, and I really missed it. So sadly, you don't catch all trades, but it's okay. So let's start with the let's start with yesterday trading. You will see there was very little hindsight trading. Many things were prepared in advance. And then we will move on CPI analysis, like what we can expect from Bitcoin next. We'll be starting over here. So I was, when I was waking up, I was just summarizing for us the main bounce from the previous range. Let's go down. In order to get more upside, this was very important market structure to reclaim first. Okay. Let's go. Market is pushing. This market structure, once you reclaim, then you open the road for much higher. So you always watch that, because you see initially market rejected, yes, and then you did a reclaim. So we were already pushing to the upside. When we go to order books, that's a key factor here. By the way, this was a crazy gold nugget for our traders. Yeah, I can't imagine how anyone is trading just with technical analysis. You absolutely need order flow. Otherwise, you are getting wrecked. You are guessing. You are relying on luck. You are just subjective, very subjective to the market. When Bitcoin drops below 80,000 and starts selling into heavy demand clusters, both on futures and spot, I will expect similar scenario to play out as in the yellow circle. You can see how market significantly slowed down in the area a few days back and gave swing bounce. So let's go here. You are seeing as market is falling. Do you see why market is slowing down in the fall? Hundreds of millions of spot walls and perpetual walls are getting filled. Same thing here, but there was even more on perpetual. So leverage was filling heavy walls. When you have empty order books, like here you breach these walls, very easy for Bitcoin to move abruptly up with impulse. Same thing to the downside. Look here, move, like, do you see empty? Very little walls are there, so market is easily falling. Now I was expecting a very similar scenario when we come into the 76,000 and lower. Hundreds of millions are sitting on the buy side. They, like, I was assuming we will exhaust market, yeah, and exhaustion is critical portion of trading, yeah. When one side is trying to push the market with market orders, but passive market participants are absorbing them, and in the end they exhaust them, so they have no more leverage or just capital to short further, and they will employ their own capital to push against them. There they fill limit orders, plus they will be doing market buying, and you are getting huge bounces, and this is how market works on fundamental level. So this was expected here. This was predicted we will get reaction. I know it's very wide box, but I know I want to interact on the long side in the box. I'm not crazy FOMO trader who will be shorting here without like with bad reward ratio. So I was looking for longs here. Same thing was on the Binance Spot. Now we can go into the order books, so you can see that also as well. This is also connected to that swing long you were getting. So let's go here. I don't know why I'm missing data here, but you already filled multiple walls here and pretty substantial sides on perpetuals. And look at that, even as you were falling, look how fed it is. Yeah, so many people want to fill longs in this area or just profit taking on shorts from higher. Spot market same. Okay, so you were already hitting a lot of clusters. Look at that. Yeah, these spot walls already exhausted market. We are trading long here as well. And then another cluster. And if you zoom out, look how fat order books are. And this is extremely important factor when you're pushing your video long. You are doing pullback and you are seeing really massive spot longs added to the area. And this is signature, like I'm educating on this in our group. These are trend continuation walls, which are helping when you are getting such walls in the order books. When there would be no walls, it would be more risky. You actually can come to the deeper areas and to the low to retest for another swing failure pattern. But these walls are preventing for that. And also because some people are sleeping here, even our traders. When you are doing pullback, this was another area to get long. Like I told our traders, I'm looking for longs in this box. And you also watch spot walls for another long. So this was really good. And you can see we've got the reactions. Order books are critical for anything you do. This was covered. So here is the box. By the way, I was waiting for a bit deeper pullback yesterday, so I can add to my trade, because I don't want to add a bit higher. Then I would be making my stop loss wider. But you know, you've got the new spot walls which change the dynamics. But at the morning, this is how market looked. And for the shorts, you were looking at this box. This is, by the way, where you are rejecting right now. Like when I go sleep, you are literally here in this start of the box. You are rejecting from these two highs. Let's go to chart so I can show you. So it's not, and this is like I can trade intraday here, some scalps and intraday trades. But once this was finished and I went to sleep, I told our traders to literally watch this box above us, and you are getting reaction. So first you did front run of this high because you were feeling some nice walls, and then the swing failure pattern of this high. Was it? Maybe it was on leverage. This is on spot. So exactly start of the box is now giving you that pullback. Beautiful. Let's go for a down. So as we were pushing out of the lows, it was very clear for me, like I don't want to interact on the short side as market is pushing, because I really don't want to interact on the short side in the low volume node. The volume profile here is, look at that, big head, some belly and empty body. Yeah? So you want to fill this with volume. And proper resistance, like first proper intraday resistance is awaiting at the high volume node with naked point of control from previous day. And you will also complete, because this volume profile is also like double distribution. You are building volume here and here. So you can rotate and you will be looking for new opportunities here. So when I turn on my shorts folder, you will see where my main short was engaging. This was taken live in the group. Yes, so I was already shorting here, the first front run of the naked POG, and then this was New York Open, and we've got beautiful absorptions, massive rejection into the highs. Market literally repaired weaker high with strong high. This is really strong high. Look at the long wick. The velocity of the rejection was very fast. You were getting high volume spike, relative volume spike compared to London session. Extremely good high, which means you also can expect much stronger move to the downside. Yes, look at this. Shitty high, shitty reaction. Bad high, okay-ish reaction. Extremely good high, and you are getting strong reaction. Yeah, so strong and weak highs are important. This naked POG. And you can see I literally planned myself at the morning. I want to interact with POG. I will not be engaging here. So simple. There was also I was placing some limit orders also before. I was expecting if we get weak, I will get filled. buy side was not easy. I mean, it was easy for the buy side, and then I canceled limits on a short side where market was approaching it, because I enter as a market participant most of the time. Now this is extremely this is extremely important. Spot market, look at that. So value buyers on spot market still dominate our current bounce. We can see perpetuals try to fight it here and there, and they lost all battles. Visible bull CVD. These people are unaware another high time frame support start. These people who were creating bullish CVD on, like, look at that. Perpetuals were trying to short, but price was increasing in the uptrend because spot was leading it, and the spot was not getting absorbed. Spot was locked, same with the price, and perpetuals try to fight. So I don't want to short in such conditions when I see such bullish CVDs. And you hit high time frame support here, so you really need to let market work and bounce 5, 10, 15%. You will look for shorts much higher at our naked poke. So that's why this kept me away from bad shorts here. And in the end, I identified this is also very likely someone was feeling institutional long on spot markets. Was I posting that? Yes. Here it is. Hard to see pullback when we have institutional bid present. Someone is still feeling a large buy order on spot. Spot leading bounce with almost no healthy pullbacks. We get on 5-minute time frames. That's one easy way to identify price direction in live with spot inflows. So look at here. We can go back to chart. I just want to show you what was, yes, like this. So this push here, so you are getting continuous spot beat. Leverage was trying to fight it. In the end, they were losing that. The spot stopped buying in this region, so you finally get first good pullback. That's first reason. And one thing this was so controlled from spot market buyers. Normal healthy structure can be more violent, like it can see more volatility. So first you push here, you can do something like this, then you can then do this. Yeah, this is normal structure, but this was a bit abnormal. Constant spot buyer, market orders, and yeah, until he is in the market, you don't want to fight it in shorts, because some people definitely got burned yesterday. They were shorting, and they were fighting the big spot inflow. Yeah, look how big this buyer was. He actually bought. We go over here. It was minus 98 million up to 29. Okay, so we bought over 130 millions on spot market. That's huge demand. Only at this stop, the spot buyer stopped. You can see is now going sideways, and in the end, we've got big sellers on spot market, and that's also actually gave us bullish CVD here. We almost reached back to lows, but we are far higher on the price, yes, compared to this. So bull CVD on spot market, and we push to the upside. Yeah, I think, my personal opinion, because I trade this market for years, this was big spot buyer. I don't want to fight him, on the short side, and you wait for the nice pullback to go. And also he was placing multiple walls here to stabilize price on spot market, and he was also definitely absorbing, because again, heavy shorts on spot market, but unable to reach back to lows. A massive delta, just 50% pullback, even not that. Yeah. So this is how this market works. You don't want to fight whales. You really need to identify what are they doing, because otherwise you will lose money. The only setup, by the way, before we got higher shorts was this. We saw massive longs actually coming into these walls here. And market was not giving you swing failure pattern. So these longs were in the end right. If you wanted to do swing failure pattern here, what you needed to do was to push to the high and reject, and start changing market structure and going down below these people to trap them. This happened a bit later. In the end, they got squeezed if they were too greedy. But yes, this was set up, and this also warned you. There is no swing failure pattern. Big longs at the highs. Still, market is not trapping them. Warning sign for you. They can be right. Yeah. Let's go further down. So here it is. So that this was first short of mine, reaction from the high volume node with the smallest reaction. Now we've got the short. Yes. So you were getting multiple highs here, and now you finally at the New York Open you are getting that You're getting that nice strong reaction from the naked point of control with strong high put in, yes. And equities also were helping this rejection, so it was beautiful. We're watching Exocharts as well. So I was already preparing traders, the spot wall army awaits. So I was actually taking this scalp long here from this wall. This was substantial wall. It was like 1.45% move in few minutes, very good for scalper. So this I also took. Small front run of the VWAP as well. Equities were going back to lows, which was putting Bitcoin into pressure. So in such case, you wait for equities. This low, by the way, was very key on equities. If we do swing failure pattern out of the low or not, and in the end we did, and it helped Bitcoin to debounce. But I was watching that very, very carefully. And I told our traders, because some traders were thinking we might even go lower, I said you might get bounce here first from structure view. This is last market structure before Asia impulse. So we either create expanded range from here. Once lost, we open road to the downside. I literally, this one market structure affected bias pretty clearly. When I can turn it on for you. Do I have it here? No, I don't have it here. So I can rechart it again if you want. Here. This market structure, because this is after the impulse market, this was first market structure support for you. You can also see from previous range here. High volume node and point of control as well. So you pretty much want to hold this as a support, yeah, for more aggressive for this first pullback you are getting. And I said to our traders, this high chance you might get expanded range. Expanded range means this. So you first push into the impulse, and then you are going for first pullback, and you will be holding that pullback and creating new local range. Until this point is still first local range, and then you start pushing further. So you are so this was range, but you are now moving higher, so this is continuation up to the upside. But first you expanded, like you really needed pullback, yeah, after such move without any pullback, okay, and you held this support. If you would be losing this area, it was very obvious for me we go lower, but we still had so much support, yes, in the spot market. So, and look at that, perpetual markets also very heavy walls here, not much support until you come here. So market participants were longing and hiding stop losses behind these big walls. This is 500 bitcoins, that's 40 million wall. That's not, this is very serious, 400 bitcoin here. And the spot walls, yeah, we took 1, 2, and then you've got so many more to go over to the downside. I breached them, yeah. So yes, market exhausted itself. And you've got the reclaim of the VWAP, which was very important for continuation to the upside, because this VWAP is very strong already. And if you reclaim, then you are confirming the trend to the upside very likely continues. So this was very, very easy pullback. Okay, so let's go further down if there was anything interesting. This was plan of action before I went to sleep. So I said most good trades are done. So I was placing the boxes again, updated boxes. You want to watch for longs and shorts. So this box was starting at 83,000. Close to this first high. So I said you will be looking for shorts in this box and you will be looking for longs in that box. Let's go to Tradingdifferent. What happened today? Here you are. Here you are. You are ejecting exactly from the start of the box. I was marking, and you never got a deeper pullback. So this plan was aging really well. And then I was sleeping. So pretty straightforward trading. In terms of trades, let me turn them on. It was done like this. Yeah, because I was not going over every single post. This was the first short, then was second reaction, small front run. This was local swing failure pattern. You were fixing multiple highs, and then this was the strongest reaction. And as I was expecting bounce from this region, then I took another significant take profit on the short here. If I would not do that, you see market would front run and took all profits away from me. There was one more short here, I think, on equities moving to lows again. And yes, this area never got revisited. So currently, as we are heading into the news events, I still have swing long here. I would need market to return back to this low and do a bit lower push to the downside into the spot walls, so I can add to this trade. Yes, it still has 40% exposure left, which is really decent in case we continue much higher, because in the end the target for Bitcoin will be around 87,000 for CME up close and weekend liquidity sweep. We'll discuss this very briefly. So I have long exposure. Today I'll be looking for new short as well if I get some nice good reaction, as these trades made money and then stopped out in a profit. So that's fantastic. And now we should really start the preparation for the CPI. So preparation starts very simple. You need to go to, like, first I will be checking volume profiles so I can see what is happening. So very good. So today if you were trading during, so when this happened, yeah, very early London, you already traded naked point of control from previous day, so you've got the reaction. This is also like area, so always view not only as a like exact level as I tell our traders, but you also view it as a high volume node which is ending here. So this whole area is support. You are getting already multiple reactions and you push to the upside. So naked POG is already traded from yesterday. That's spent. Traders are holding up. In case the POC is lost from previous day, I will be expecting opening road to rotate previous day range into the previous day val. So it's waiting at 79,000. So you will be aiming for this region to look for swing failure pattern or maybe front run of swing failure pattern if you have enough trap shorts. We'll always need to analyze. So that's really good. What we can do is also we can merge this profile, because we are seeing market is going in the same, market is trading in the same direction for a few days. We can merge like this. Very good. And you are getting so market is now high volume node is over here, 3-day point of control as well. It's also from 3-day perspective, if while you trade above this area, you are not expecting further downside. If you lose this area, you literally open road again, because you've got less volumes built here as well. So market will be populating with new volume in those areas the lower you go. So for now, market is holding really good support from 3-day and also from previous day naked POC and high volume node. Really, really nice to see. For further upside, you want to reclaim daily open. Is always a sign of weakness or strength, because you will be changing daily candle to green, which can bring more capital, and then you will be pushing to the highs. Highs are not, they are unresolved. This is not bad high. We've got some nice volume, relative volume spike in there. We did swing failure pattern of this high, so you've got easy invalidation for those who traded Asia. But you know where is the problem, and it's a big problem for Bitcoin. Is going to be like magnet. You can see on perpetuals you come into these highs, but you didn't take them. So this is now equal highs formation. So we know there is 90% chance Bitcoin will sooner or later fix equal highs. So you've got double liquidity now, because remember, people shorted here, they put stop losses behind. People shorted here, they put stop losses behind. So liquidity is building here. It's going to be like magnet for Bitcoin to take this out, especially now CPI is coming. It's gonna bring volatility to market, so it can easily push. And you've got another high here, so very, very juicy liquidity. If we go to liquidity, we can see it's already building up because of this. Look at that. So this is going to be magnet. In case you get some news and you come here, you will be waiting for swing failure pattern and the liquidity node swept for the reaction. Just remember, CPI today can give some nice deviation to the upside, to the downside. If it's strong, I would be very careful to fade CPI, because on CPI days, we don't tend to fade markets often. I'll be talking about this at the end of the video, what will be implications from high CPI reading and from low CPI reading. But overall, you will be looking for swing failure pattern here with liquidity sweep from these three highs. Liquidity to the downside is looking like this. I'm always aware. This is more internal liquidity from these lows. In case, because you always separate swing failure patterns to internal liquidity sweeps with swing failure patterns and to external. And for example, you've had 1, 2, 3 lows here. You can do move to the downside. Before you go to the lows, you can do something like this. You can check and take internal liquidity and then push to the upside. And then you will be focusing on Let's go. Then you have this low here. Again, decent liquidity build up. It is low. You see, I need to zoom in so it shows better, but you can see it's decent build up here. So if this area is lost, you will be looking for swing value pattern or just breakdown. But first, you want to trade from 78,857 this node for potential swing value pattern. And to the downside, we are still witnessing high time frame liquidity regions. You can see to the downside we already took very good node. Again, same thing here. Look at that. There was gap here. You took liquidity, bounce. You took liquidity, bounce. That's how this market works. You always need to fill passive market participants' limit orders. And who is filling them? Of course, a lot of pain from the market. Yeah, people who were long, wrongly positioned over the weekend, they are filling these smart traders who are patient, who have all time in the world to trade this. Okay, so we went over the volume profiles. We can also check. So what's the open interest? Open interest was, well, like look at that. So open interest is extremely down for the past few days, but right now you are building open interest. This is not, I don't think this is clever, because I already want to be positioned before CPI. So I'm already long from much lower. I'm very safe, even on new volatility. I would not be entering into market before news. It's gamble because if CPI is bad, we go really big time to the downside. If CPI is positive, if CPI will be good reading, we go to the upside. Markets will be rebounding and equities as well. So people are entering here, and those are premature entries. But as they are entering, they will be providing us fuel to the upside or fuel to the downside. How much? 3,000 bitcoins already built on stable coins. Not bad at all. You can then go to Exocharts and see what is happening exactly. You need scalping templates. These are showing trap traders and new position traders much better. We can go 2-minute time frame. Okay, so you already were, some longs were coming into the highs, pullback destroyed them on Binance. I think on Binance we have big build-ups. Oh yeah, we do. For sure we do. 5-minute time frame. Oh, wow, wiwa, as we can say in Kazakhstan. So, yes, very big longs on Bybit currently in these regions. In case CPI gets bad and you still have these people, they will be providing massive fuel to the downside. Already, if we zoom out, yes, so this market had some nice shorts in here. Seems they were closing as market was pushing back into their entries. Big shorts at the lows as well. So yeah, Bybit already, some traders on Bybit, like look at that, huge shorts were closing actually. This was fueling the latest move to the upside. And also open interest. Yes, open interest is increasing. So you have a lot of longs here in this area. So for example, I would not be longing here. I need to wait for structure. You were getting naked POC, so this was really good long area for you. And then you've got the liquidity here, and then you've got this low. So these are 3 areas you look for longs, but I would not be longing here. Why? The problem is your stop loss invalidation gets much wider. Yeah, so you need wider stop loss to be invalidated here. So reward ratio is not good. 1-to-1. It's 1-to-1 to move to the highs of the range and also to the bottom of the range. So these longs here will be vulnerable into the news events. It's pretty much gambling for them. So we have fuel now from Bybit. Really nice. So then preparation for the trading is also coming from order books. So of course Binance is number 1. So we are seeing some demand wall here at 80,200. That's cool. Then another one here. On the sell side, we are seeing 2 walls here, which very likely try to stop market and fill orders at the end of the liquidity behind these highs. And then you've got really big walls. You can see over here, you don't even need to hunt them into order books. You can clearly see they are twice larger than these walls. So 350, 356, 359. So yeah, they are at the end of the weekend liquidity. Nice. So perpetuals, and also I'm seeing multiple walls here. So yes, again, under this low, as I said, there is liquidity below this low. People will like to interact on the long side in this area, already preparing some orders. Very nice. And of course, big buy walls are still below current low. Now to the upside, spot market is more interesting. So it's still very likely when you come to this low, these walls can exhaust market and provide us another higher low in case we go. They will be protecting this low. Still substantial spot walls. And on the sell side, we can zoom out. We are seeing this is not area for me. I want to really look for shorts. Yes, I will be looking for shorts only from here. I will be explaining in a few seconds why. So I'm watching spot sellers above this weekend range. So this is another area of interest for me from this spot order books. 87,200 up to 88,000. Really good cluster. Maybe we get scalp here. 86,000. You can watch in the future for scalp. Maybe the scalp becomes short, but this it's in the start of the weekend range is not ideal. Yeah, so these two areas you can watch, and to the downside is very clear. Now further, how you can see much more upside. So if you are in long with me here, or you took the long on the pullback as many of our traders did, how you want to see more upside. So for you is going to be very simple, because you also want to be patient on some trades you already have exposure. So how you will see very likely upside, if you go beyond the liquidity node here and you don't start rejecting for swing failure pattern and getting returned back into range, it's very likely you will be grabbing this whole huge liquidity up to 87,000 at least. Why? We go here, we will turn on only day of the week, which is measuring weekend. 50-minute time frame or 5-minute time frame is actually fine. We can see people were going sideways on the weekend and some longs were getting trapped and in the end shorted. Weekend is not offering as much resistance from the levels. So what you want to do from weekend is to actually move here and stop everybody out, and then you get nice short. With the move up on the weekend, you will also fill the CME gap. I need to mark the line for myself, so I got there so I can watch it precisely. Let's go here. We know CME gaps don't have to be filled right away. It's ideal you do it first day, but once you don't do it, then you have plenty of time. But once you get acceptance, I would say now is not so big distance to do this and fill it. Yes, so and once you fill the CME gap, you'll be at 86,400 on CME, so very likely 86,000, 87,000 on Binance or Bybit. So yeah, I'm not looking for much shorts here, but I want to take some nice short from once the weekend liquidities run, once all these week highs are run, once CME gap is closed, and so that's going to be my plan for these shorts. Again, it depends on CPI New Zealand. Let's go to technical analysis. We can turn off this. We are local. Save and reload. Sometimes it's lazy to reload. You can also see when we were rotating today, this was the smaller range we had on the left, so VAH was hit to the dollar. Beautiful. You can also now merge this whole region. It's going to be more nasty volume profile, but you also want to watch it because market is clearly ranging here. So, okay, so yes, it was also on larger range, VAH. Dobre, čiže... Oh, sorry, because someone was calling. So yes, this range. So how to see more upside? Again, we'll be accepting it. This is also like you don't see much resistance here. This was one way move down over the weekend actually. So very little resistance here. If you start reclaiming the VAH, of course I will be expecting more upside. So I will not be looking in shorts into this region. And same here. This is from AMT. To the downside, we now have VAL at 80,000. That's round level. So maybe first you will do, like I was showing you, that liquidity from these lows and from this low is ending somewhere here. So you can also watch this area for intraday long before you come here and before you potentially return back to lows. Yes, so but that's far away. Okay, so that could be a nice plan for today, to watch that val. Once you lose the val, is warning sign for you. You might see this low and this low. Yeah, so be careful and trade on what is in front of you. No guessing or other things. Market structures, don't need to go over them. Medium time frame is still very high or far away above us, I think. Yes. We can check the weekly resistance. Yes, weekly resistance is still above us. So from previous week we have TPOG at 86,434. If it matches with CME up close, is very likely you get nice reaction, at least scalp. Ideally it can become day trade. So again, at my area of interest I have TPOG, but I will be looking also to run these highs as well. So ideally maybe we get first reaction. If you see highs front run, you know why, because of this TPOG, but eventually you want to run the weekend liquidity as well and then get another short. So be aware of these two scenarios. Monthly time frame, similar epoch there, but monthly still developing, so we don't need that. We don't need this as well. Session naked palm of controls, they are nice. Most of them were traded. This one is TPOG. Yeah, TPOG was traded already from Asia session. That's cool. And you already traded, so not only daily naked POG, but also from yesterday New York. The New York session offers you the strongest naked point of controls because the most volume is traded there. You can see the front run here. So the daily naked POG was hit, and then also front run of this. So you've got double confluence to go long here. Yeah, so that's why we are seeing such nice reaction. We can also merge these three profiles, and we are getting TPOG was traded here and volume POG is over here, 78,453. Nice level below this low you can watch. So I don't want to overcomplicate, so I showed you few things, few trade ideas I want to trade today. We went over the order books as well. We can have a look on TRDR briefly. What is actually a spot doing? We can watch. If spot buyers are still present. Oh yeah, they are still here. Even now they are engaging. That's cool. Yes, that's not much information. Order books, of course, you know the drill. It's actually worth joining our group just because to learn TRDR alone. Yeah, if you're swing trader, literally some of my friends who are not traders, they really want to take long-term trades position on Bitcoin. I teach them, I learn them just TRDR, and they are taking some fat juicy swings. Blue bands still have over 85% win rate in 2025 and also in 2023. So again, trade opportunity. You view it as a region, off you go. Yes, blue bands, swing trade. It's pretty simple, or at least intraday bounce. And they are not only to show you position, but you also take profit on short when you see them, and you also expect range to form, so you can actually milk the market, because I often make more money when I know it's very high likelihood we will have a range first, because I can do multiple range rotations and look for more longs, yes, at the lows of the range. So yeah, so the blue bands again playing out. Order books are now more neutral, so I don't have any advantage here from order books. So for me, this is no trade area for me, to the downside, to the upside. No trades here, because it's neutral. I don't have, I need much more, like here, yeah, heavy pressure, massive pressure, big buying pressure, huge buying pressure. Yes, so no advantage here, no trades, so simple. Market needs to go much lower for me to go long. Market needs to go much higher for me to go short. Simple. Another thing I want to show you. So this video is full of gold nuggets. We watch equities along with Bitcoin. I think it's improving our efficiency as a trader. For example, Bitcoin was doing this very nice pullback here. Oh yeah, here. So we were dropping, whole world was in fear. Yes, classic when Bitcoin is losing and making new lows. But you know, equities during Asia were also moving down, but do you see, this is very critical here, equities did swing failure pattern and then Bitcoin followed. So equities were helping Bitcoin. It was very crucial, and equities also do swing failure pattern, so very, very good. Bitcoin currently is also a lot stronger than equities if we zoom out, yeah. They pushed yesterday heavily as well, but they lost a lot of their gains. Now they are pushing finally, but Bitcoin was trading stronger because the equities also, look at here, they returned to new lows while Bitcoin was uptrending. So divergence, bro, like this is divergence. It past month, look how correlated we were, I mean past week or past 2 weeks, almost 1-to-1, but now Bitcoin acts stronger. It's trying to show the light for the equities. We might do relief bounce. But it's all depending on CPI. So yeah, we will see. I will tell you this about CPI in a second. So CPI, I can show you on Forex Factory, but I will be watching that on Forex Factory. Be watching that on Financial Juice. So well, let's go here. CPI, here we are. So expected is 0.3% on month-to-month basis, and yearly is 2.9. So today our expectations to see lower CPI print, I think is based on cooling down economy, and also oil is going down. Yeah? So energy is big influencer on CPI. So now if we get higher, like a lot higher CPI print, so above 3%, 3.1 or even further, I think this is going to be pretty bad for the markets, because it's simple. Fed cannot raise rates if the inflation is rising. So market should go down, yeah, also, but no financial advice in this video. Everything I say is entertainment and education, remember that. So high CPI print above 3 and plus, the higher the deviation, the stronger the reaction. Markets very likely will knee-jerk down, so equities down, Bitcoin down. On the other hand, if we get lower print, so this will be 0.2 or 0.1, and this will be in line and lower, 2.8 or 2.7, then we might get pushed to the upside, yes, because it means Fed can cut rates faster, and markets are all about liquidity. Since 1971, these markets are all about liquidity, since the gold standard was replaced. Yes, we are like addicted to this. I think during my lifetime this will not change. We will only see bigger and bigger equities and bubbles and everything, because we just built world around it. Yeah, we literally have debts our future kids need to repay, but we live good life because of this. So, and I don't think it will change. So now CPI needs to go down. I mean, nothing needs to happen, but if it goes down, then we should see a nice move to the upside on a Bitcoin, on equities as well. And as I'm in core position on long, I will be happy to see that. So I will be watching that. Very nice. So on CPR, you are ready. Final two words on, because I was doing very extensive posts, I'll be showing you that, why not? But I'm trying to do this like often, so our traders are always educated. So first of all, let me show you bear market targets for Bitcoin. You can stop video and read about it, but very simple thing to say. I expect these targets to be hit mainly when we get full-blown financial crisis or a recession. And for now, it's just recessionary fears. There is still not as much confirmation we will be slowing down so much. It's mainly tariffs, and we can't predict if inflation will go so much up on tariffs or not, because there are also counter trade forces, like dollar is weakening, and dollar is weakening. And what is the second force? I really forgot. Okay, it's gonna return back to me. So bear market targets, in case we truly get like S&P needs to fall 30, 40, 50% for Bitcoin to really lose it. Bitcoin in the history, like all previous cycles, Bitcoin lost at least 70%. If we lose 70%, it will put us to 32,000. If we lose 60%, it's gonna be 43,000. If we lose 50%, it's gonna be 54,700. In my personal opinion, I think all these cycles were missing ETFs and institutional capital. We right now have it, so the liquidity is better in the system, and first time in history I expect Bitcoin to behave stronger during full financial crisis. If we get one, I think we will bottom out 50 to 60% from the highs. Okay, so I'll be watching these two nodes. In case not, it's all good. I will be prepared for 70%. But yeah, I expect Bitcoin will be acting stronger. From the you can literally save this picture and leave it for yourself for a few months or few years when Bitcoin will be pushing to the downside. So first you would need first to go down. We have 9-month range from 2024 and we have multiple big supports here. 8-month point of control, high volume node, strong support at 66k. Okay, it was started the impulse, so we should see reaction. Val of that range, you have double strong empty ranges here, so 64 to 58 will be protected. That's pretty cool. But if you start losing this 9-month range, then you will be opening road for much deeper pullbacks, and then you need 4-year macro range pull, and this is how it looks. And it was serving as big support for us for a few months when we are ranging here. So this macro high volume node with POG was acting as a strong support. Then we lost it and we went for bullish retest of the another macro POG from previous cycle actually. But we did front run of the macro POG, which is at 47,210. So in the future, if you see losing this range and going for this low, we might get swing failure pattern from this low on macro scale from 47,200. So this is the first big area for me to buy really cheap Bitcoin. If this area is lost, structurally, you have very little support here. And you will be if we ever get to 36,000, and this will actually finish 70% pullback symmetry I was just showing you from previous cycles. This is the most bearish scenarios you get. I will be personally employing every single cent I have, every single money I have for this area to buy Bitcoin, as it is for macro. It is untested 4-year macro val. It's gonna put higher low, because the main goal for Bitcoin is to never put lower low compared to previous cycle. So if you bottom out at 36 or 30 is pretty cool. It's still much better than 16,000 last time. So here very, very strong area. And this is also critical market structure because it started from previous cycle. It held it and it was lost. Huge resistance. Yes, we were in 9 months in this range. Rejection, push. So in the future you expect a massively bullish retest of this area. So 32 down to 28, 29,000. You will have protection from that as well. For me, again, if I see this price, fantastic, I'll be buying heavily. But those are really when the world will be in full-blown panic. Yes, because if you don't get it, then I think Bitcoin will be bullishly retesting this range. This was the plan for a long time. Yeah, bullish retest of this range or acceptance into it, and then spend some more time in there and do some rotations. Because in the end, what is happening now, as I was showing you, here was low volume node. Yeah, this was a matter of time before Bitcoin hits it. And just from previous symmetry, you do massive impulse, and then you did 33.7% pullback. You did massive impulse, and you are doing now 33.7% pullback. It is ending around 71,000, so it's almost completed. But nothing strange is happening. Bitcoin did this before. It just took less duration. If you start going down below 70,000, well, it's gonna be a big warning sign for you. So this is, you can stop there and read it. Technical, by the way, bear market starts when you take out this low as well. You will be negating bull market. So yeah, it's not going to be nice. Then people will be looking to short the pounds for the new low. That's what we also need to be aware of. Another interesting level is 66,357 because MicroStrategy is holding Bitcoin there. They have 500,000 Bitcoins. We can see this website is absolutely lovely. It's loading, so let's wait. Okay, so we can see they are one of the biggest holders of Bitcoin in the world. 400,099 Bitcoins. Their average price is 66,000. When market goes below this level, I think many news outlets will be informing MicroStrategy is getting into minus. MicroStrategy might be liquidated in the future, which is actually unlikely even if Bitcoin gets to 20k. They don't have much debt. Yes, they have a 9 billion debt currently, and they are refinancing for 0.37, so it's almost like free money. yes, they are okay. Unrealized P&L, like all is good, but if market goes below that level, it tends to do in strong bear market, it always goes below sale or average price, so it tries to test his resolve, yeah. We can say. So time will tell, but yeah, it's going to be like hit to the sentiment, we can say. And finally, on volume profile, you can see why it was expected. Why I said many times in my YouTube videos, even if you lose 86,000 to 84,000, we have not much support until you hit 73,000. Plus, a bit of volumes were traded here, where we were bouncing first time 80k, and then 76,000 when we are currently bouncing. Look at that, we've got some volume, so that's why we are getting another swing long, okay? But in the end, the main support is starting here. This volume profile is also showing you how little volume was traded in the rest of the, like in the first portion of the 2024, and like when you lose 56,000, you need to build some nice volumes, and not much support. Then you see 42,000. So another low volume node pocket. So that's why you can actually go for these levels. 47k that POC has volume, but in the end, this is another area. But yeah, very limited. Now we are building massive volumes. People are just buying, transacting Bitcoin here. If 56k is lost, you will be destroying people buying here and buying here. So that's going to be huge selling force on the marketplace. But very likely not happening Bitcoin alone. Equities needs to fall much further. So that's bear market targets, like really bearish bear market targets for Bitcoin. We will be trading and assessing Bitcoin as every single day as it's developing. This is the best approach, yeah. You can do this, you can prepare yourself for the downsides. Yes, you can prepare yourself, but you need to assess market every single day to see what is actually happening, because this is still strong. This range, we can literally be for weeks or months here in this range if we get acceptance, okay? So, okay, final words on macro situation, so you understand things a bit, and then this is going to be it. I was doing very deep posts here about macro. So right now equities are experiencing pretty heavy drop at the beginning of 2025. This black line is already here. So we are seeing historically this is already becoming uglier at the start. In my personal opinion, markets, this is fabricated fall because Trump didn't have to push for tariffs. Yes, he could be doing some more peaceful policies. If you see such a big crashes without like real economy rolling down, because we still have we don't have very strong syndications, economy is so weak. Yes, companies are like, employment is good, companies are still having decent quarters, but Trump, like for example BlackRock, they own 11 trillion of assets. Yeah, of course you are talking to these guys when such a big sell-off is coming to the marketplace. You are in talk with many of these, also the banks talk between each other. Yes, people are making money, big money on shorts, and Trump definitely helped that to his buddies. I think Trump wants to do a lot of cleansing right now, so it doesn't affect the second half of his presidency, where he's very likely will be pushing. So, like, he will give us probably the biggest bull market in the end. He's trying to get Fed aboard, so they start cutting rates. He wants to create pain in the equities. I think that's my reason. Another thing is Doge. Doge is searching to optimize government spending. If it's true what they are saying, like they will be saving 1 trillion on spending, that 1 trillion is not entering into economy anymore, and this is also creating like markets are seeing that. So is less spending means economy can be slowing down because of this. Yeah, U.S. government is in the end larger spender in the US. Okay, so that's why also markets are falling. So all these line cleansing is happening because of this. So right now we are seeing equities are going down, Bitcoin and also dollar. This is really unusual, yeah, because in the past dollar was not going down in such situations. This is what we are seeing in our lifetime, the bond bear market. We can see we literally ended the 40 years bond bull market. this is going to be very interesting. As I said here, when government bond yields are elevated, it leaves the risk-free hurdle rate for investors. We also see net liquidity still going sideways. Okay, so the market is not stimulated. It's really fantastic. Bitcoin went up on quantitative tightening, we can say. Reverse repo operation also are drained. These were stimulating money used in 2021, 2022 post-COVID. So currently markets need liquidity. The Fed said very clearly, if the rates will be on zero, they will be pushing. They will be doing quantitative easing again, so pushing a lot of liquidity into the system, and that's in the end the best time when you want to go long in equities, on Bitcoin, in whatever, when you have central banks on your side. Okay. But you also have a European economy stimulating, like they want to print money, and also China is, I think, want to print money. So yeah, you still have some liquidity, but not US. US is not a board. So this is really interesting. We had the biggest rises on Bitcoin, biggest increases on price of Bitcoin when dollar was going down. Bitcoin was going up. Now dollar is going down. Bitcoin is still going sideways and rolling down. I think this is also helping to prevent a larger drop on Bitcoin because dollar is weakening. And if you ask yourself why you see such a strong gold, well, here is your reason. Gold is very strong and is increasing because US dollar is weakening. You are losing purchasing power, and gold always wants to preserve it. Yes. So this is also supportive factor for the Bitcoin in the end. We will see how this plays out. Okay, this was long video, so I hope it was useful. If yes, please give it like. If you want to learn trading with me and with our traders in a group, join us. You will not regret. Thank you for watching, traders, and see you in the group. And I wish you nice trades during CPI. Bye.